Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. In this video, I'm going to share with you our 7-question checklist to make sure that you understand the long-term care policy. I wanted to do this for 2 reasons. One is that as an independent insurance brokerage, our commitment to each client is that you will be empowered to understand what you're considering and make a choice that you're going to be happy with for the long term. Number two is that we've noticed that a lot of folks who've gotten quotes for long-term care insurance and then come to us later, or in some cases, they even got policies years ago elsewhere, come to us not understanding the features of the policies they've been shown because those features were not properly explained to them. And with an eye towards making sure that you're empowered and ready to make a great decision that you'll be happy with for the long term, let's dive into that checklist. You can come to our website, aboveboardfinancial.com, and get a free copy of this checklist so that you can use it yourself. So the first question you want to ask is, what type of long-term care policy is this? And the answer that you're going to get will typically fall into one of 3 categories. The first is traditional long-term care. With those policies, you usually pay in money, and if you have a long-term care need in the future and you have qualified long-term care expenses, then you get benefits back out of the policy. These types of policies can be a great choice if you're looking for a very cost-effective way to address the long-term care need. Now, the second category is life long-term care hybrid policies. These hybrid policies are also sometimes called linked benefit policies. As the name life long-term care hybrid implies, these policies are a mix of life insurance and long-term care insurance, but they're heavily weighted towards the long-term care benefit. The life insurance benefit is usually structured so that you get a modest positive return or a full refund of your premiums if you live your entire life never needing long-term care. The third category is permanent life insurance with a long-term care rider. This is a permanent life insurance policy, one that lasts your entire life, such as whole life insurance or universal life insurance, but you get a rider that allows you to take a portion of your policy while you're still alive if you need long-term care during your lifetime. And it's good to know what type of policy you're considering because the type of policy will determine a lot of how the policy works for you over time. Now, the second question you want to ask is, what is the maximum monthly benefit initially? And the next question to ask is, does that maximum monthly benefit have an inflation adjustment? Some policies do and some policies don't. And it's really important to understand what your benefit is likely to mean for you in the future, because the reality of long-term care is that oftentimes many of us are going to use those benefits many decades into the future. If your policy has an inflation adjustment, you want to ask, what is the inflation adjustment and is it simple or compound interest? The way inflation works in reality is that it is compound. And we want you to end up with an insurance policy that's going to work the way you expect it to work. Simple interest policies do not grow as quickly over time. And so sometimes you might see a simple interest policy with a high headline number, but then if you really do the math and play forward what that's going to be worth in the future, you might be better off with a lower inflation adjustment, but choosing compound. And we can help you figure that out. Another good question to ask is, how long does the inflation adjustment on my policy last? We highly recommend lifetime inflation adjustments because, again, inflation in the real world will last for your entire lifetime. And we want you to end up with a policy that works the way that you hope it's going to work when you need it. There are some policies in the market where you can choose a 20-year adjustment or a 10-year adjustment, and that can sometimes make sense, but usually lifetime is the right call. And if you are going to choose something shorter, we want to make sure that you're doing it from a place of understanding. Now, another great question is, how long would the benefits last if I took the maximum monthly benefit each month? And this is important to understand because people have a range of long-term care needs. The average long-term care need for a woman is about 2.5 years, and for a man, it's 1.5 years. But there's a lot of variance around that. Roughly 15% of folks who need long-term care will end up needing it for longer than 5 years. So it's really important to make sure that you're getting a policy that is going to work the way you expect it to work, and that you go in understanding in what scenarios that policy will cover your full need, and in what scenarios you need other resources to make sure that you're taken care of and living your life the way that you're most comfortable. Now, another great question is this primarily a reimbursement policy or an indemnity policy? And a reimbursement policy or an indemnity policy will both require you to demonstrate that you need long-term care. That typically takes the form of having a certified doctor attest that, yes, you do have a bona fide need for long-term care. Now, after that, it's a pretty different process. The reimbursement policies require you to submit receipts for qualified expenses or demonstrate that you are spending the money on approved expenses. By contrast, indemnity policies just pay you the cash and then it's totally your business how you spend it. You can spend it on long-term care expenses, or you can buy yourself a really nice bottle of wine or a really delectable baked good. It's totally up to you. So indemnity policies are just a lot more flexible once the benefits are released to you. The next question to ask is, can my premiums increase in the future? This is really important because a long-term care policy is, if all goes well, a long-term commitment. Hopefully you'll get this policy and live a long life. And if you do need long-term care, it won't happen for a while. And we want to make sure that it's financially sustainable for you over the long term. Some policies fully guarantee premiums. They absolutely cannot go up. Other policies give the insurance company the right to raise rates in the future. And it's not necessarily that either one of those is the right choice versus the wrong choice, but you want to make sure that you go in knowing how your policy works. Now, the last question to ask is, if you're considering a policy that has a death benefit, meaning you're looking at a life LTC hybrid policy or a permanent life policy with a long-term care rider, it's really important to ask, until what age is the death benefit guaranteed? And the reason this is so important is that we've seen a lot of quotes that people got elsewhere where they've been shown a policy that is not fully guaranteed. In fact, a policy can be worth zero in the 70s or the 80s. And literally not once has the person who was given that quote had any prior awareness of the fact that that's how the policy could work. Now, the odds of that happening are admittedly low, and those policies are not always bad, but you should definitely not go into that with no awareness that that is one possible outcome, because there are also policies in the market where that risk does not exist. So it's important to just be aware of what you're choosing. So come visit us at aboveboardfinancial.com. We'd be delighted to help you explore your long-term care policy options and make sure that you make a choice that is really the right one for you and that you're going to be happy about for the long term.